A credit card is a payment card connected to a line of credit that can be used to make purchases like going out to eat or getting a pedicure. Unlike a debit card, which deducts money directly from your checking account, a credit card lets you make purchases with borrowed money up to a certain limit that you're going to have to pay back later. Because you're borrowing money from a lender, you can't sign up for a credit card the same way that you might a debit card. You're going to have to apply first and be approved. A credit limit is the maximum amount of money that a lender is willing to give you. When you're approved for a credit card, you'll be given a set credit limit based on your credit score and other information that you provided when you applied for the credit card. For example, when I applied for my first credit card, I had a minimum wage part-time job and no credit history, so I was approved for a card with a limit of $800. This meant that I could put up to $800 on the card, even though I didn't have $800 in cash at the time. If I spent the full $800, I needed to pay off some of that money first before using the card again to make new purchases. If you go over your credit limit, you may get charged a penalty fee and it may damage your credit score. If you don't pay off your balance by the end of the billing cycle, you'll be charged interest on the balance that you do carry. So going back to my $800 credit card, if I spent $800 and I could only afford to pay back $300 by the end of the billing cycle, I would get charged interest on the remaining balance of $500. A credit card is a convenient spending tool that helps you keep track of your purchases and build your credit score if used carefully. Many credit cards offer rewards in the form of points, miles, or cashback that can be very valuable. Some even offer additional benefits like theft protection or travel insurance. But just like any other tool, there are drawbacks to using a credit card if used irresponsibly. Because a credit card is so convenient to use, it can be easy to lose track of how much or how quickly you're spending. Credit cards use compound interest, which can snowball if you carry a large balance. Additionally, you may get charged late fees if you don't make the monthly minimum payments on time. High interest rates combined with overspending and expensive fees can make it really difficult to keep up with payments. This is why credit card debt is some of the most expensive consumer debt out there. When it comes to borrowing money, everyone's needs and preferences are different. If getting a credit card is right for you, remember to read the fine print and do your research so you can set yourself up for a healthy relationship with your money.